preparing for a fund accounting and custody operations at Northern Trust interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through how you would calculate the daily NAV of a mutual fund or UCITS fund. The interviewer wants to assess your grasp of daily fund accounting workflow, including trade capture, pricing, income accruals, expense accruals, reconciliations, review controls, and final NAV release. While answering, focus on beginning positions, trade activity, cash movements, corporate actions, pricing, accruals, liabilities, reconciliations, reasonability checks, maker-checker review, and investor dealing implications. Daily NAV is the fund's net assets divided by units or shares. I start with prior day positions, add trades, corporate actions, income, expenses, cash movements, and market prices. Then I reconcile holdings in cash to custodian records, validate exceptions, calculate accruals, and run reasonability checks against benchmarks or prior NAV. Only after review and approval do we release the NAV, because it drives investor dealing, performance, and client reporting. Question 2. How would you explain the difference between fund accounting and custody operations? The interviewer is testing your understanding of how Northern Trust separates safekeeping, settlement, and asset servicing from accounting, valuation, NAV production, client reporting, and operational ownership across teams. Make sure to cover custody as asset safekeeping and transaction servicing, fund accounting as books and records, and NAV production, plus how breaks in custody data can impact accounting outputs. Custody is mainly about holding assets safely, settling trades, collecting income, processing corporate actions, and maintaining official cash and position records. Fund accounting takes those custody inputs, prices the portfolio, books accruals and expenses, and calculates NAV. In practice, I would not treat them as isolated. A custody break, missed dividend, or failed trade can flow directly into accounting records and create an NAV issue if not resolved quickly. Question 3. What steps would you take if your cash reconciliation does not agree with the custodian statement? This question evaluates your operational discipline, break investigation skills, understanding of cash movements, settlement timing, bank fees, FX activity, income receipts, and escalation judgment. In your answer, talk about comparing ledgers, identifying aged breaks, checking trade settlement, dividends, subscriptions, redemptions, FX, bank charges, timing differences, documentation, escalation, and client impact. I would first isolate whether the break is a timing issue or a true error. I would compare the accounting ledger to the custodian statement by value date, currency, transaction type, and reference. Common causes are unsettled trades, income receipts, FX conversions, bank fees, or subscription and redemption cash. If the item is valid, I document it and clear it. If it is aged, material, or unexplained, I escalate before NAV approval. Question 4. How should a fund accounting team handle corporate actions such as dividends, stock splits, and mergers? The interviewer wants to assess your understanding of asset servicing events, entitlement calculation, accounting treatment, custody notifications, security master updates, and NAV impact from corporate actions. Be sure to mention mandatory versus voluntary events, ex-date and pay date, entitlement validation, position adjustments, income booking, tax withholding, reconciliation to custodian data, and exception escalation. Corporate actions need to be processed accurately because they affect positions, cash, income, and valuation. For a dividend, I would validate the ex-date position, dividend rate, tax treatment, and pay date before booking income or receivable. For a stock split, I would adjust units and cost data while checking market value continuity. For mergers or elections, I would rely on verified custody instructions and ensure accounting records reconcile after processing. Question 5. A trade fails to settle on settlement date. How does that affect custody operations and NAV production? The interviewer is testing your knowledge of trade life cycle, failed settlement, cash forecasting, position availability, accounting recognition, reconciliation breaks, and communication between custody, accounting, and client service teams. While answering, focus on trade date accounting, settlement date custody records, cash and position breaks, market exposure, failed trade monitoring, broker follow-up, aging, escalation, and disclosure of NAV impact. A failed trade is an operational risk because accounting may already reflect the trade while custody records do not show settlement. I would check whether the fund uses trade date accounting, then identify cash and position breaks created by the fail. Custody would follow up with the broker or counterparty, while fund accounting assesses NAV impact. If the fail is aged or material, it must be escalated, documented, and monitored until settlement or cancellation. Question 6. What would you do if a security price is missing, stale, or materially different from yesterday's price? This question evaluates your valuation control mindset, pricing source awareness, exception handling, tolerance checks, fair valuation awareness, and ability to protect NAV accuracy under time pressure. Make sure to cover primary and secondary pricing vendors, stale price checks, variance thresholds, market events, broker quotes, fair value procedures, documentation, approvals, and impact analysis. I would not simply override the price without support. First, I would confirm the primary pricing source and check whether the security traded, whether a market holiday applies, or whether there was a corporate action. If the movement is outside tolerance, I would compare alternative vendors, market data, or broker quotes. Any manual or fair value price should follow the fund's valuation policy, include evidence, and receive proper approval before NAV release. Question 7. How are management fees, custody fees, and other fund expenses accrued in the NAV? The interviewer wants to assess your understanding of accrual accounting, expense recognition, fee bases, daily NAV impact, invoice validation, cap arrangements, and liability reporting. In your answer, talk about daily accruals, annual fee rates, net asset or gross asset bases, fixed versus variable expenses, expense caps, reversals, invoice true-ups, and review controls. Fund expenses are usually accrued daily, so each dealing day bears its fair share of cost. For example, a 20 basis point custody fee may be applied to the agreed asset base and divided across the year. The accrual increases liabilities and reduces NAV. When invoices arrive, I compare them to accrued amounts, investigate variances, and true up if needed. I would also watch for expense caps, waivers, and client-specific fee arrangements. Question 8. How do you account for income on fixed income securities in a fund? The interviewer is testing your understanding of bond income accruals, coupon schedules, ex-date treatment, amortization, withholding tax, receivables, and how income affects NAV and performance. Be sure to mention accrued interest, coupon rate, day count convention, amortization or accretion, receivable booking, cash receipt reconciliation, tax treatment, and differences between income accrual and cash collection. For a bond, income is earned over time, not only when cash is received. I would accrue interest daily, using the coupon rate, face amount, and correct day count convention. If the bond was bought at a premium or discount, amortization or accretion may also be required. On coupon date, the receivable is cleared when cash arrives. Any withholding tax or reclaim should be booked correctly, because income errors flow directly into NAV. Question 9. How do subscriptions and redemptions affect fund accounting and custody operations? This question evaluates your understanding of investor dealing, cash movement, unit creation or cancellation, NAV dependency, liquidity impact, anti-dilution controls, and coordination with transfer agency. While answering, focus on dealing cutoffs, NAV-based unit calculations, cash receipt or payment, share capital movements, reconciliations with transfer agency, liquidity planning, and settlement timing. Subscriptions bring cash into the fund and create new units, while redemptions reduce units and create a cash payable to investors. The number of units is normally based on the applicable NAV after the dealing cutoff. Fund accounting records the capital movement and custody confirms cash receipt or payment. I would reconcile transfer agency instructions to accounting records because incorrect dealing data can distort shares outstanding, NAV per share, and liquidity planning. Question 10. What controls are most important before releasing a NAV to a client? The interviewer wants to assess your risk awareness, control discipline, NAV validation process, maker-checker mindset, exception management, and appreciation of client deadlines at a global custodian. Make sure to cover cash and position reconciliations, price checks, income and expense reasonability, corporate action validation, tolerance reports, NAV movement review, sign-off workflow, and escalation of unresolved breaks. Before releasing a NAV, I would want evidence that key inputs are complete and reasonable. That means cash and position reconciliations are reviewed, prices are within tolerance or approved, trades and corporate actions are booked, income and expenses look sensible, and shares outstanding agree to transfer agency. I would compare NAV movement to market performance and prior day activity. If any material exception remains unresolved, I would escalate rather than release an unsupported NAV. Question 11. How are foreign currency transactions and holdings handled in a multi-currency fund? The interviewer is testing your knowledge of FX translation, base currency reporting, realized and unrealized gains, local currency cash, spot rates, and reconciliation across currencies. In your answer, talk about trade currency versus base currency, FX rates, revaluation, realized and unrealized FX, local cash balances, settlement exposure, and multi-currency NAV controls. A multi-currency fund records assets and cash in local currency but reports NAV in a base currency. Each day, foreign holdings and cash balances are translated using approved FX rates. Unrealized FX gains or losses arise from revaluing balances, while realized FX occurs when trades, income, or conversions settle. I would reconcile by currency, not just in base currency, because offsetting translation effects can hide local cash or settlement breaks. Question 12. What is the fund accounting impact of securities lending activity? This question evaluates your understanding of custody-led securities lending, collateral monitoring, lending income, manufactured dividends, recall risk, disclosure, and how lending activity is reflected in fund records. Be sure to mention loaned positions, collateral receipt, income sharing, corporate action entitlements, manufactured income, recalls, valuation of collateral, reconciliation with lending agent reports, and risk controls. Securities lending allows a fund to lend holdings to borrowers and earn additional income, usually against collateral. From an accounting perspective, I would track loaned securities, collateral balances, lending fees, and any income split with the lending agent. Corporate actions still matter because the fund should receive equivalent economic benefits. I would reconcile lending reports to custody and accounting records, since missed recalls, collateral issues, or income errors can affect NAV and risk reporting. Question 13. A client challenges the NAV movement for the day. How would you investigate and respond? The interviewer wants to assess your client service approach, analytical review skills, ability to explain NAV drivers, and discipline in investigating issues before communicating conclusions. While answering, focus on decomposing NAV movement by market price, FX, trades, income, expenses, subscriptions, redemptions, corporate actions, and breaks, then communicating clearly with evidence. I would first acknowledge the query and avoid guessing. Then I would break down the NAV movement into market price changes, FX, trades, income, expenses, subscriptions, redemptions, and corporate actions. I would compare the fund's movement with benchmark or portfolio exposure and review exception reports for unusual items. Once I identify the driver, I would respond with a clear explanation and supporting numbers. If an error exists, I would escalate under the NAV error process. Question 14. How would you prioritize work during a high-volume day with tight NAV deadlines? This question evaluates your ability to operate in Northern Trust's deadline-driven environment, prioritize risk, manage exceptions, communicate early, and maintain accuracy under pressure. Make sure to cover critical path items, materiality, unresolved breaks, workflow tracking, communication with supervisors, avoiding shortcuts, documenting decisions, and protecting client deliverables. I would prioritize items that can materially affect NAV release, pricing exceptions, cash or position breaks, failed trades, corporate actions, and share capital updates. I would use a checklist to track completed and outstanding tasks, then communicate early if a dependency could delay sign-off. Under pressure, I would not skip controls. I would focus on material risks, escalate blockers quickly, and document any assumptions or approvals. Accuracy matters as much as speed. Question 15. Why Northern Trust? And how does your understanding of fund accounting and custody fit this role? The interviewer wants to assess motivation, company awareness, fit for a global asset servicing environment, and whether you connect technical knowledge with client service, controls, and operational excellence. In your answer, talk about Northern Trust's reputation in asset servicing, custody and fund administration, control culture, client focus, global scale, and your relevant accounting and operations strengths. Northern Trust appeals to me because it is a leading global custodian and fund administrator where accuracy, controls, and client trust are central to the business. This role fits my interest in the full investment operations chain: trades, custody records, pricing, reconciliations, accruals, and NAV reporting. I like work where small details matter and deadlines are real. I would bring a strong accounting mindset, curiosity around exceptions, and a client-focused approach to resolving issues. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video.